Welcome to Caching Waves. This is going to be a slightly different video. We're going to be covering macroeconomics as well as the business cycle and the effects that can have on Bitcoin. Now, if this is the first time you've seen this, this is the PMI. The ticker for it is USBCOI. It's the United States Purchasing Managers Index. And basically the way it works, I'll show you a quick explanation here. I'll read this for you. The manufacturing ISM report on business is based on data compiled from purchasing and supply executives nationwide. The survey responses reflect the change, if any, in the current month compared to the previous month. For each of the indicators measured, new orders, backlog of orders, new export orders, imports, production, supplier deliveries, inventories, customers' inventories, employment, and prices. The report shows the percentage reporting each response, the net difference between the number of responses in the positive economic directions and the negative economic direction, and the diffusion index. The PMI reading above 50% indicates that the manufacturing economy is generally expanding. Below 50 indicates that it is generally declining. So to make things simple, if the PMI is above 50, our economy is expanding. If it's below 50, it's contracting. You can see this just repeats over time and time again. It goes back all the way to 1948. And this is the business cycle you've heard about over and over again, probably. If you never have, this is it. And these are basically the boom and bust cycles. You can see they line up with our crashes. As of right now, we're at 48.5, and we had our peak in April of 2021. We're all the way at 65-ish. So you can see it's kind of like an RSI. It swings up and down to various degrees. Now, I'm going to show you how this cycle tends to operate. The easiest way to remember is what's fresh in everybody's mind, and that's COVID. So first thing, the whole economy shut down. As you remember, economic growth slows. The response to that is interest rates fall. The response to interest rates falling is economic growth and growth stimulated. From there, we get increased employment and demand for raw materials, aka the price of everything going up. If you remember, lumber was going through the roof. We got housing, everything like that. Then we get shortages, skill shortages, and supply problems, issues, backlogs, orders, all that. Then from there, we get staff wages and raw materials prices rise, if you remember that. And then inflation picks up as higher costs are passed to the consumers, aka inflation. And then the response to that is interest rates rise, which repeats the whole cycle over and over again. So where are we now? My best guess would be somewhere right here. We've been holding pat on interest rates in the US, and my guess is as soon as they fall, we will start to get economic growth again. Okay, so how does that affect Bitcoin? This is the PMI. Put that in blue. There is the PMI. Here is Bitcoin, long term. Show you this. It's pretty neat. Just put that slightly below. As you can see, in every cycle, the business cycle, the PMI, we peak at the top in Bitcoin. This is the number one indicator I have found for Bitcoin, other than DXY, which kind of correlates. For the most part, it does. I just want to show you this. You can see sometimes it slightly lags, but we had a peak here in February of 2011, peaked in June, a couple months later for Bitcoin. We then contracted right here down to November 11th, or November of 2011, and then we moved up in our business cycle. We moved up in Bitcoin. Business cycle came back down. We were consolidating here sideways. We hit a bottom here right in the middle of this consolidation, and then we pumped in the business cycle. You can see we pumped in Bitcoin. You'll see how much more this becomes correlated as we go. Again, it's got a little bit of a lag, and then we came back down, bottomed in our shorter business cycle there, and pumped again. We then had a longer drop, contraction in the economy. So did Bitcoin. Again, you can see there's a bit of a lag effect, but it really works for getting close to bottoms, and the tops as we move on are almost identical. Business cycle top, boom, Bitcoin up around 20K, huge drop. There was our COVID crash. Again, huge expansion up to above 60K, and the last huge drop, again, business cycle contraction, and now we're starting to expand again, although we are still below 50. As you can see, it happens in cycles over and over again. Okay, so let's add the DXY. There's our DXY, put that in white. As you can see, let me hide Bitcoin for a moment. As you can see, the dollar index is actually pretty much the opposite of the business cycle. So when the dollar loses value, the business cycle tends to move up. When the dollar gains value, the business cycle goes down. You can see it's pretty much correlated exactly. And that's obviously also why when the dollar declines, Bitcoin goes up. So these things kind of act together, right? So I'm going to invert the DXY. So I'm flipping the scale. So to see if we have correlation here. There we go. I flipped it. So where you see price going down on the DXY, it's actually going up. It's just easier to track this way, right? So let's line these up. And let's throw Bitcoin back on. Okay, we'll go back a little bit here. This is easier to see. But I invite you to check these all out yourself. It's very, very interesting how they affect each other. So as you can see, dollar was at its peak. Remember, we're inverted here. Or at its lowest, sorry, we're inverted here, right near this peak of 20,000 back in 2017. Looks like the dollar hit its low first because we are inverted. Then the business cycle topped, and we came down pretty much at the same time. And then the dollar hit its peak value. It actually gave us the first indication before the business cycle. Looks like right at that candle when it hit a high. Remember, this price is inverted. That's actually at 103, 104, 103. The dollar started to decline. Business cycle flipped to the upside, and boom, off we went. On this one, we can see the dollar hit its low first, and then the business cycle topped. So you can see as soon as one peaks or hits a bottom, take a look at the other, and boom, the dollar took off, business cycle declined. And we can see at our low, business cycle was starting to slow down here at the bottom, and the US dollar kind of drifted sideways. So as of right now, you can see the dollar has been moving up. We're at 103. It looks like the business cycle is starting to move to the upside. So what I believe is going to happen here is dollar is going to move up, business cycle is going to take off, Bitcoin's going to take off. And what needs to be happen first? What is our earliest indication? That would be, in my point of view, interest rates falling. Interest rates falling should weaken the dollar, stimulate the economy, and we can get our next leg up. So this was just a quick little introduction. If this interests you, please let me know in the comments below. I wouldn't mind covering some macroeconomics on Sundays. It's difficult to explain in real time. I'm trying to get better at that. But these are the driving forces of the market, you realized. Imagine looking back and having these indicators with Bitcoin. All right, there's your early indication. When the dollar peaked in price, remember this is inverted, I'll flip it back over. So your early indication of a Bitcoin bottom there was the dollar peak, and you can use Elliott wave obviously to calculate that. Bottom of the business market. Business cycle starts moving, dollar declines, Bitcoin goes up. We reach the peak of our market. The dollar is near its low. You can see. Business cycle starts declining, dollar goes up, Bitcoin drops. Dollar peaks. We're getting near a low here for the business cycle. Dollar drops. Business cycle is not crashing anymore. And Bitcoin takes off. Right? You can see these, they happen on microcycles as well. So the earliest indication is going to be interest rates dropping. But I am also tracking the DXY, and I'll put up a video of that shortly. But I do believe we're going to get a drop here. And hopefully the business cycle starts getting a positive above 50 rating. We're not quite there yet. As you can see, we're at 48.5. This came out July 1st. It comes out the 1st of every month. And if you want to see the PMI, the URL for it is ismworld.org, and you can find the PMI under there. It's the manufacturing PMIs, and they cover a lot of different things, and it's all free. So this report is basically just this, in explaining in a longer form newsletter. But yeah, it looks good. Just need to see, hopefully in August we get a positive plus 50. We start trending here to the upside. But what should be obvious to you is that a business cycle to the upside is needed shortly, and the earliest indication is interest rates dropping. It doesn't mean it causes more problems like inflation, etc. But I'm just talking about what affects Bitcoin and the business cycle specifically. And when you look at this stuff and you have this sort of chart, I would suggest you write this down or copy this. If you look at any potential tops in history, bottoms, this pretty much always holds true. So it's kind of nice just to zoom out and kind of see where you're at. We already went through this. We already went through this. We're kind of here. This is next, right? As long as the playbook keeps doing what it does. And I'll be tracking both of these moving forward. I'll try and do a quick little update probably Sundays between the DXY and the PMI. All right, guys, that's it for this one. Please make sure to like and subscribe. Hit the bell if you want the videos right away. I'll see you on the next one.